Hey everybody, it's Pete. Good morning. Thank you so much for joining me today. Welcome to today's episode of Stocks for Breakfast. We have a ton of stuff to talk about. If you were day trading yesterday, you really had to be stock specific. If you're swing trading yesterday, you're probably looking to take some profits, or at least what we call moving up that profit maximizer. We had a pretty good call last night on our weekly swing trading, weekly coaching call. We have one every Monday night and one every Wednesday night. I'm going to take you behind the scenes because we actually had some really good questions. And one of the questions that kind of really set me off last night was about somebody who mentioned he was struggling and couldn't figure out why he was struggling. And then we went into the stocks he was trading, and I almost lost it. We're going to touch on that. We're going to talk about Bitcoin today and the big smackdown that it had overnight, and whether or not the 60,000 point level is the spot to get long again, or are we waiting to see a little bit of a bigger correction? And we're going to get into some earnings today. We're going to talk about Nvidia, which is scheduled to report after hours. We're going to take a look about whether or not I think they have to absolutely blow out the numbers for the stock to go higher, or if the Metaverse news is going to carry that stock higher no matter what. We're going to talk about Home Depot. We're going to talk about Mara as well, Marathon Digital, and how that got spanked with a big news story yesterday as well. We got a lot to talk about. And of course, going to answer your questions, and we're going to get into sector rotation. So stick around. I'll be back in just 2 seconds. Okay, so thank you so much for joining me as we talk about every day. Everything we talk about here is for educational purposes. It's up to you to make that final decision. It's my mission to help you make better decisions. So we're actually going to get right into Nvidia. I want to make sure we stick right on target. We had a really interesting trade in Tesla yesterday. If you didn't happen to catch that YouTube short, make sure you click down onto the channel page and go down and watch that. We actually talked about a short covering rally and what that looks like and the circumstances heading into that short covering rally, and we absolutely nailed it. So take a look at that video. We actually shot it at 11 o'clock in the morning yesterday, 11:15, and then around 1:30, 2 o'clock in the afternoon, Tesla had this nasty, vicious short covering rally, and it was really fun to watch unfold. So if you happen to have a chance, take a look at that. We're going to shoot on over. We're going to take a look at Nvidia. What's expected when they report after hours today, and what we're actually expecting to have happen to the stock price. So the first thing I want to point out with Nvidia is this. The stock has, from the October lows to where it just hit around 325 a few days ago, it's basically a 65% rally in 5 weeks, which is a pretty good move for a stock. Obviously got fueled, and the bigger picture market pushed the stock up higher. A lot of people were buying Nvidia stock. It just kept rallying and rallying one week after another. Now we actually have a potential change in Nvidia, and below 290 is the level that I'm watching. If you remember what we did yesterday, we gave some pretty specific levels about reading the tape and what needs to happen. Oh, by the way, we're also going to talk about Lucid and earnings today as well. Tape reading is the second part of the three pillars. The first one's stacking the order flow. The second one is tape reading. And tape reading is whether a stock is moving closer to or further away from a reference point. So right now, for me, for Nvidia, 290 is the level that I need to see it maintain. Now, I'm not trading Nvidia into earnings. The only time that I have a stock into earnings is if I already have a head start or a winning trade, and I have one of two things that I'm expecting to unfold. Remember, everything that we talk about is scripting out what you plan to do, but more importantly, if this happens, then I plan to do this. So if I have a winning trade on a stock heading into earnings, I will hold that trade, and only one of two things. I'm going to end up, if earnings aren't good, usually it'll pull back to a flat and I get out of the trade right where I got in, no harm, no foul. But if the earnings come out and blow the doors off the numbers and rallies, then I'm going to end up with a big winning trade and I can move up a trailing stop. Now, I can hear you thinking, like, why would you do that, right? It really comes down to this. If you told me right now for the rest of my life, all I have to do is work hard to get a head start on a winning trade, and I'm either going to have a small profit or a small loss or a gigantic win, sign me up for that for the rest of my life, which kind of takes us into, managing profits. We have these mental blocks sometimes about trades moving in our favor and then pulling back and being angry that we lost some of that unrealized profits. We're going to talk about that as well, because that was a big subject of our conversation last night about whether or not you should be selling as a stock moves up or selling as a stock moves down. And that was a really interesting conversation on the coaching call last night as well. So I'm going to walk you through that a little bit. both of those subjects from the coaching call last night. So as far as NVIDIA is concerned, we want to know, again, as we talk about every single time, we're talking about buying a stock, whether it's buying a stock into earnings, we're talking about NVIDIA right now into earnings, is what's expected. So we're actually going to do a little bit of a deep dive into that, and we're going to go right into here so it's a little bit easier to see. The margins, as we said, is always a big number. The percentage growth of earnings and earnings per share are a big deal. Revenue percentage growth is a big deal. But I think you're going to end up seeing this part of the conversation when they report today is guidance. What are they guiding forward, and what does that number mean for the next quarter, and more importantly for 2022? So that is really the big thing I'm going to be watching. I'm going to be watching this projected adjusted earnings per share to surge. So think about what that says right there. Analysts are projecting. So remember, everything that we talk about right now is what's expected. How does that expectation play out with the actual numbers? So we actually had this question last quarter on NVIDIA, where NVIDIA and actually a couple of stocks where they numbers were better, but the stock went down. And this is exactly why we get a lot of questions about this all the time. And it's understandable. It's like you just need to go like one layer deeper, and it's not just the raw number. Remember that. Remember, we always talk about writing something down. Just the raw number is not enough. Not it beat earnings per share, not it beat revenue. It's what was the percentage growth that it beat by, what was the guidance going forward, and what was expected. So now we already have the line in the sand. You know, that's kind of what we talk about all the time. What's the line in the sand? What's the number that we're supposed to pay attention to? So what's expected for the earnings per share growth today in NVIDIA is 52% growth. That's a pretty big number, especially after the stock has already rallied 65% from the October start to this high about 5 days ago. That's a big move. So not only has it already gone 65%, it also needs to beat handily a 52% growth in earnings per share. So that's what we need to pay attention to after hours today, which kind of takes us into a couple of other stocks that already reported this morning, which is Walmart, and we're also going to take a look at Home Depot. So two big box retailers right now that reported this morning that are actually in play right now. So what I'm looking at the market today is we're seeing that the market is kind of still stuck in this box. So I actually want to point out the box here because we mentioned it yesterday. This box, remember we said that when a stock goes into that price range, pushes up, obvious order flow, breaks that trend. Now we have a box. We have the previous high, and we have the level that it broke that trend. The SPY right now is what we're calling the right price until it gets out of there and either revalidates that trend or starts a new one to the downside. We are now moving up the stock market power pyramid. So we're into sector rotation now is the big picture. Remember, the bottom part of that pyramid is the major indices, obvious. Now, the longer term move off of the October lows, that order flow is still obvious. However, now we're in a sideways potential change of trend. And this is something else you want to write down. Most money goes to die when you don't recognize this change of trend. So the market, the bottom part of the power pyramid right now is in a potential change of trend. It's not a change of trend, but here's the thing. It's less obvious. It's not well bid. It's not pushing higher. We're not closing on the highs. It's a potential change of trend. So what does that mean for us from a trade management perspective? That means now we shift up. We go one layer higher, and I'll show you what that means. We're going to go one layer higher on the power pyramid, which now means we go into sector-specific ideas. Are there any sector-specific ideas that are jumping off the page and say, let's get in there and start focusing on those stocks because smart money has attention on them? And remember what we do. We're just looking for a spot to piggyback onto those orders. And right now, utilities, not really the most exciting thing in the world. We're going to go one layer deeper into consumer defensive. If you want to take a look at a real estate stock, SPG, Simon Property Group, is one that's actually been performing really well. But we're going to go one layer above that into utilities. Then we're going to go into Home Depot and Walmart earnings and how we're looking for those stocks to trade. But let's first go right over into consumer defensive. I want to make sure that you have a couple of stocks to pay attention to kind of right out of the gate today. So on the consumer defensive side, DLTR had a monster day yesterday. If we drop in the volume there as well, you can see that it was actually followed up with really nice volume as well. So now the challenge here is, are you buying it too late? So this is really where you start to work the trade, and whether or not it's a day trade versus a swing trade. I would absolutely be looking for a day trade for this today, not a new swing trade. All right. So moving along, target, getting into a little bit more boxes. Okay. Obviously, we're looking at this staying above that level, and it's staying there. Procter & Gamble also up at that level. Pepsi has pulled back. Oop. PEP, and Walmart. Walmart actually having pulled back, held support, and now you can see Walmart's actually up a little bit higher. So if we get into the Walmart earnings and we pull this up here, remember what we just said about Nvidia and what's expected and what we're looking for. Well, Walmart numbers came out after the stock just sold off for basically the last week or so. Walmart pulled back. They beat what was expected, and they guided higher. So you can see they're boosting higher guidance. So those are the things you want to hear. What was expected was beat by a good number. Again, good is relative for each stock. And they boosted the guidance for the next quarter and for 2022. And that's why Walmart right now is trading up 1.4%, just over $2. So now we have a stock with a catalyst with positive guidance that we could look to trade either as a day trade or certainly as a new swing trade, looking for it to retest that 152 level. Now, this is very important. 152 got sold hard here. 152 got sold hard here. So remember, we keep talking about two-step trades. So this would be a two-step trade. The first step would be the initial entry based on the earnings catalyst. So the two steps are, we're looking for feedback before we look to add. The second piece is that we're looking to know when we should be looking to add. So this would be a good catalyst to consider as a new buying opportunity today. But for me, it would be two pieces because it's only the first day of the new catalyst and we have a wall of resistance at 152. So I wouldn't add the second piece until I get through 152 because the market is now telling me new buyers stepped in, pushed it through that resistance, and now we have some more room to go. So remember, we keep talking about every day. I hope I'm inspiring you to get a little bit more detailed with how you map out how you plan to trade and build those arguments. The next stock we're going to take a look at, which is Home Depot, okay, very similar. Topped estimates. So remember, what we just talked about Nvidia is the estimates. What the estimate is what's expected. Analysts come up with numbers and everybody agrees, okay, that's the estimate. That's what we're expecting to have happen. Home Depot topped estimates, 9.8% jump in sales. So they beat EPS estimates handily. They beat the earnings handily. And now we're looking to take a look at how Home Depot is trading off of those numbers. And more importantly, how to set up a trade. So you can see now Home Depot actually heading into earnings basically was the right price for roughly 3 weeks, maybe even 4 weeks. So there was no price action, no head start, no thinking about it prior to it, unless you were long from about 3 weeks ago. And now the stock has been stuck in this range. Now, what's a little different about this one compared to Walmart is this box is very obvious. 376 is the top of the box, which you can see right here. And right now it's trading up almost $5 right at 376. So we're going to know right away in Home Depot about whether we're going to get follow through or not. So this is kind of a fun trade to map out together because we know the line in the sand, 376. It's right at 376. It's higher because of the earnings that just came out. And again, how they attacked those estimates, how they attacked what was expected. So now it's a very easy line in the sand. Very similar to a stock that we talked about yesterday, where we said if it gets to 100 and stays there, that's going to be an opportunity to stay long and get long. And it did. It stayed there the entire day. It actually went from 100 to 108. Now we're looking at Home Depot. As long as it's above 376, I'm going to say, okay, the earnings buyers that came in, that's their line in the sand right now. We need to see them hold that line in the sand. And as long as they hold that bid, remember the language, holding the bid means smart money's come in and still has bids under the market. So if there's sellers coming in, taking profits at that level, if a stock goes up and goes sideways and sellers come in, but it stays sideways or doesn't pull back that much, that means there's fresh order flow holding that bid. So it's kind of easy for us to manage this trade today. If it stays above and this week, if it stays above 376 based on the earnings catalyst, we know that there's new order flow coming in supporting that and likely to go higher. If it goes above 376 right on today's open, it pulls back right away. Now we have to reevaluate the position. So again, because it's an earnings catalyst and the level is obvious, we're going to put our first initial piece on at the 376 or better, looking for it to hold 376. If it doesn't, it's a small piece. It's an initial trade. If it does, real breakouts follow through. That's another thing you want to write down, and very, very important. Don't worry about the ones that, oh gosh, it seems like every time I buy new all-time highs, pulls back on me right away. I'm the only person who buys all-time highs and they fail. Take a deep breath. If it breaks out and follows through, awesome. Real breakouts follow through. When there's real order flow, they follow through. If you keep your losses reasonable on the trades that don't follow through, it's a matter of hanging on to the ones that do and then using what we call the profit maximizer, which is working that trade as it keeps moving higher and higher. So there's three different opportunities right now. We're talking about Nvidia. We're looking at the guidance and the expected numbers from Walmart and Home Depot. Both of them, as of this moment, were pretty good. We're going to work our way now over into crypto. Big spank overnight, right? So Bitcoin, taking a look at the futures, is kind of teetering right on the 60,000 number, which you can see is kind of interesting. We actually drew this box last week. So during this move higher, it rallied to new all-time highs, pulled back. And when it pulls back, that's when you start to draw the box. So you have the previous high and you have the level where it broke that recent order flow. So what we're looking to do right now is put the pieces together in this potential change of trend. Remember, potential change of trend is where money goes to die because you're trying to still trade what's not as obvious as it was prior to that. So the point of building out this box is we're okay with doing nothing until it becomes obvious again. Remember, if it's not there, it's not there. So right now, this is the box. The box right now, as we said, 68,000 down to 60,000. We're kind of like peaking just below that 60,000. Now, does that mean to bail out of a long position? No, it's still sitting there at that level. As of right now, it's holding that bid 58 to 60,000. But you need to now script out, what do you plan to do if it rolls over and starts to push down on heavier volume? Which kind of brings me into the conversation that we had last night. I'm just going to give you a quick preview of this, and then we're going to come back to it, which is all the way down here. Let me actually zoom this in a little bit for you. If you want, you can take a snapshot of this. So this is our weekly coaching call last night. You can see the topics that we actually talked about. They're pretty in depth, and our coaching calls are really designed for you having your biggest obstacles and us discussing how to get over those biggest obstacles. But this was actually a pretty interesting one right here, okay? You can see actually we had a couple of conversations here about taking a loss, how to take a losing trade, accepting the loss. Last night's coaching call was built around what are you struggling with right now and how can we fix it as fast as possible so you get to the point where you're losing less money, understanding what to avoid. And then the next part, the exciting part of us working together is understanding how to hold the winners longer. Because once you understand how to hold those winners longer, then those losses, it's just a business expense, which is a really big part of trading. You get to the point where you understand your business, your trading business understands how to make money. Writing that check to pay the electric bill is not a big deal. In our case, as traders, the electric bill is, okay, I had a loss in Chewy stock or whatever it happened to be. No big deal. Pay that bill. I'll make it back the next trade, or I'll make it back this week. That's how professional traders think. But the point I want to bring up is this question. I just want to make it a little bit bigger for you again. Here is an alternate method for exiting a losing trade. And the context of the trade is kind of relating to what we're looking at in Bitcoin right now and some of these stocks that are pulling back, which is if you're very close to a stop loss, but you're not getting stopped out. And we actually used a trade. Let me actually pull up the trade because it's kind of a cool example to discuss. We had this trade back here in BVAX, and the opportunity that we're talking about is here. You can see this is one of our optimal entries here. And let me zoom that out a little bit. And we actually got long, and you can see why we got long. The order flow is pretty solid for about 4 weeks. And it pulled back. Again, one of our favorite opportunities, a strong stock that pulls back, gives us an opportunity to look for a new move higher. Similar to this is actually what we were looking for as the next move. This pullback, looking for that. This pullback got long here, moved in our favor. The stop loss was here. This was the day where we had to make a big decision. So if you could imagine that day right there, where if you go into the day saying, what do I want to see? What don't I want to see? So we had the 2-day rally after we got in at the optimal entry. We had solid order flow. So we stacked the order flow. We read the tape, had good timing got the optimal entry, moved 2 days in our favor. And then the third day, we had this giant reversal candle. So it was exactly what we did not want to see. So now we have the conversation about, well, I'm not stopped out yet, but I'm clearly not loving the opportunity. So this is where we made a decision. You can make a decision here. And again, this is alternate methods. And we're tying this back to what's going on in Bitcoin right now is if you no longer feel like the edge is still there, if you feel like the stock gave it up and what happened is not at all what you expected, there's no golden rule that says if I was going to lose $1,000 on that trade, I'm going to hang on and lose $1,000. Professionals don't think that way. There's so much opportunity. There's so many other trades. And quite frankly, the stock pulling back doesn't invalidate the idea. It just maybe makes you think that I need to adjust my risk profile. So write that down. Are there situations and what do they look like where I still love the idea, but would I adjust my risk profile, simply take some of the risk off the table until the idea starts to validate itself again? Now, you could say, well, I don't want to miss my entry. That's fine, but professional traders manage risk first. That's so important. Everybody's worried about capturing every last dollar and that kind of stuff. Professional traders manage risk first. So I want to walk you through now. I did not do what I'm about to tell you on this trade. So I want to give you full transparency. This trade, this position was actually the biggest loss I had for the entire 2021 because I made the decision to hold the position because I still like the order flow. I still like the trade. It was only 1 day, so I wasn't letting 1 day invalidate the previous 5 weeks of buying. So I actually held it because I did not get stopped out. So the next day unfolded, and you can see we had that big move to the downside, and we gave it the morning to recover. It didn't recover because, again, why did we give it the morning to recover? Because a strong stock with a gap lower usually is a buying opportunity. So like, okay, let's see if the buyers step back up, and they didn't. So now flash forward a month and a half, maybe 8 weeks, and we had the same conversation again now about Bitcoin and tying it into what somebody was terming calling scared money or panic selling. That was actually the conversation. So if we tie that trade scenario back, and by the way, I can't stress this strongly enough. These coaching calls, if you want, you can take a snapshot of this. I'll give you a second, right? Take a snapshot of this. This is some of the stuff that we talked about last night, all right? These coaching calls are the gold of what we do. I just can't even explain it any longer. And I'm actually giving you a coaching call right now in the context of what we did. You need to learn from every single thing that happens in the market, every decision you make. Remember, we talked about the quote from Atomic Habits yesterday. Every action you take is a vote for who you are. It's so powerful, so short and so powerful. But if you think about it, if you made a decision a month ago, made a decision yesterday, and maybe it didn't work out perfectly, but it's something you can now put into your knowledge bank and make a different decision in the future. That kind of applies to Bitcoin right now. We're now in this box. It is the right price. It came down pretty hard. If you're shaking in your shoes right now on Bitcoin possibly breaking the support level, there's nothing wrong with scaling back some of your risk, which is an alternate way of handling a trade that's not working out. If you bought all-time highs and this thing is pulling back on you, but you love the idea, pull some of it back if possible. Again, might be a little challenging to do because of the coins, but learn to manage your risk profile in the context of whether or not you're getting positive feedback in the form of price action. Please, I can't express this strongly enough as your friend, as your coach, as whatever you want to call me. There's no golden rule that says you have to lose everything you expected to lose. Take the risk profile, lower it a little bit. If you're getting the exact opposite feedback you want, you can always put that position on. Now, how do you do that? You can put a buy stop in the market. If we're talking about a stock, a buy stop limit order, a buy stop market order, however you feel comfortable. But remember, we keep talking about two-step processes. If you get out of that trade and want to get back in, as soon as you scale back your risk profile, put a buy stop order in that gets you back in where the trade starts to validate itself. You might need to see it go well bid for 2 days, higher highs, higher lows, and then at the high of that day, the next day you look to get in. You might want to see the weekly chart go positive. So if we're looking at, remember we talked about this yesterday, if we're looking at the weekly chart before you get back involved, then we're talking about, because today's Tuesday, Then we're talking about you're not going to look to add the position back until we get back above 6,500 or whatever that exact number is. So just give me a yes in there. Does everybody understand what we're talking about? We're talking about being an active trader, managing the downside so that you are then positioned to keep losses small, and you learn how to make more on your winning trades, because now you understand if it goes back above the weekly opening price, which is yesterday's opening price, you're getting feedback. Buyers have stepped back in, and now it's time for us to start to work that position again. Get out of your head, right or wrong. Get out of your head, yes or no. It's, I know exactly what I'm going to do. It's knowing exactly what you're going to do based on what's probably going to happen. That's the key that a lot of traders don't understand. It's not, I know exactly what's going to happen. It's, I know exactly what I plan to do. I know exactly how I plan to manage my risk. I know exactly how I plan to manage my winning trades, which kind of brings us over to another part of the idea, which is we were talking about how do you manage winning trades? If you had to take a guess on how to make bigger profits, and we can actually get into this just a little bit right now. If you had to tell somebody, let's say, and this was a cool part of yesterday's coaching call, we were talking about alternative methods of exiting profitable trades. And there were a couple of interesting ones. One was centered around options expiration and a few other things like that. Another one was centered on exiting into previous levels, that kind of stuff. And we threw it out there. Is that the right way to exit profitable trades? And is that the right way to make or plan to make the biggest profitable trades? So in other words, what's the right exit strategy, or what is the most widely accepted and proven exit strategy on winning trades? Is it selling at the highs as it's going up, or selling as it's going down? Which of those two would you say is the time-tested, proven way to make bigger money on winning trades? Selling on the way up or selling on the way down? What would you put in there, up or down? How would you teach? If you wrote it out, you're going to lunch, manage this position for me. I'm going away for 3 days. I'm going golfing. Here's how I want you to manage it. If you had to write that down and give it to somebody, what would you tell them? Sell on the way up or sell on the way down? What would you tell them? Let me know. All right, John saying on the way up. On the way up. Radex saying on the way down. David LeBate on the way up. Barry Cannon on the way down. Let's see. Let's get everybody's answers in here. John on the way up. Barry on the way down. And by the way, Barry, great speaking to you yesterday. All right. Frank saying on the way down. Bruce on the way down. Pam Hicks, good morning. Okay, so here's the reality. We have absolutely no idea how high a stock can go. And I'm going to give you an example here. Okay. And we're going to pull this up on the daily chart. Okay. We have absolutely, positively zero idea how high is high. And anybody who tells you they have it, they absolutely know, they're full of beans. There's no doubt about it. If you have ever read Reminiscences of the Stock Operator, if you've ever read William O'Neill's book, How to Make Money in Stock, Gerald Loeb, Battle for Investment Survival, the Bible of Trend Following, which is written by Michael Covell, literally the name Trend Following. We are talking about, and actually, I think I pointed this one out too. If you want to look at a good book, Larry Hyatt, I actually just picked this one up about 2 weeks ago. Very easy read, finished it in the weekend. Every single trader who has made a fortune, has anybody here ever heard of John Henry, the trader John Henry? Just put in there quickly. Type in yes or no if you've ever heard of John Henry. John Henry is a trend following commodities trader. Okay. And you'd be like, oh, that's nice. John Henry used his profits to buy the Boston Red Sox. Yes, those Boston Red Sox. Okay. John Henry is a trader who is a trend following trader, amassed so much money, he bought the Boston Red Sox. Okay. That'll give you, it's a little bit of context, throwing a little bit of juice on the fire of the answer I'm about to give you. Trend following traders do not sell on the way up. Everybody's heard of the turtle traders too, right? They're very popular as well. Long-term trend following practitioners, for lack of a better way of putting it, have the distinguishing characteristic that they let stocks breathe and pull back in exchange for the next move. So this is a really big thing to be thinking about. If you want to make bigger money on your winning trades, the hardest part ever, the hardest part ever in trading is hanging on while you see unrealized profits go down in exchange for the next biggest move. If you've read the story of the turtles and all these other trend following traders, most of those traders who blew out and did not succeed in those programs is because they couldn't mentally handle, and I'll just use round numbers, just for example, they can't mentally handle a trade where they're positive by $1 million, see it go back where they're positive now by $500,000, and they get out of that trade because they wanted to book that $500,000, but the trading strategy calls for you allowing unrealized profits to fluctuate in exchange for the next move higher. Now, they do have a rule on the way down where they get out, but think about your next trades. And actually, we gave you an example of this in Chewy a couple of days ago, and let's actually pull that up just to really drill this point home, which was Friday's price action, okay? If you said, oh, Chewy went up too far, I'm going to get out. Chewy went up too far, I'm going to get out. Chewy went up too far, I'm going to get out. Chewy went up too far, I'm going to get out. Chewy went up too far, I'm going to get out. You would have cost yourself dollars in exchange for pennies. So I want to challenge you. Remember, I just want to bring this up on the screen again so you can take a snapshot of it. Okay, if you want, you can take a snapshot of that. So I want to challenge you right now, and I'll leave Chewy up here as a shining example of that. Big trading wins. Those who practice trend following and those big wins pay for all those pesky losses. You must mentally wrap your head around the fact that in exchange for bigger wins, when the order flow is good, when you stack the order flow, the stock market power pyramid, everything looks awesome. You're getting the greatest feedback from the market. Big wins happen when you are okay with unrealized gains pulling back to a certain point. If it pulls back to that certain point, you get out. But unless it pulls back to that point, you let it go up and you let it breathe. You let it go up and you let it breathe in exchange for those next bigger moves. So I'm going to challenge you right now to think about what is your profit-taking strategy to allow yourself to make bigger money on your good ideas. I'm going to challenge you. Write that down. Spend this week, spend today, spend whatever time you need to. Think about why you're not making more on your winners. This is a big part of what we do in the bootcamp. We actually have a whole process called the profit maximizer. When you understand the profit maximizer, and you understand whether you're trading in a momentum environment and you use the momentum profit maximizer, or you're in a trending environment where everything looks great and you shift over into the trend trading profit maximizer, it makes all the difference in the world, because now you're no longer guessing where it's going to stop. You know exactly where you plan to book a profit, but you're going to give that stock an opportunity to continue moving in that direction. So I'm going to challenge you right now. A lot of people wrote yes on the way up. So that means that we have that mindset where we are limiting or putting a limitation on what's possible. So whether it's you as a person, we don't know what our grandest version of ourselves is. Every day, wake up and say, why not me? Every day, wake up and say, why not this profit continue to go higher? As long as you know what it needs to look like on the way down to breathe versus take the profit, profit taking is incredibly easy, quite honestly, because it's structured. It's the same way with understanding how to stack the order flows, the same way of understanding how to read the tape. Once you know what you're looking at, the trading part is simple. And I don't say those things without purpose. Trading is the easy part. It's being prepared with these steps before you start to trade. That's what makes you a professional. And whether you're trading part-time or full-time, that's not what I mean. What I mean is you know exactly what you plan to do prior to the trade. You know exactly what the risk management, you know exactly what the profit-taking strategy is. And that's where trading becomes really, really fun. So again, if you want to go behind the scenes and get all this with me, and I know Simon from the UK is in there with us. Jeremy's in there with us. If you want to learn about everything that we do in the bootcamp and get my structure for doing all this, click the link below down in the description and see what we do and just see if it's the right fit for you over the next 30 days. It's not a subscription. I'd love to see you on the other side. But here's the thing. We actually had a conversation yesterday Oh, by the way, I just want to talk about Mara today. Mara obviously had the investigation with the SEC about the crypto mining and all that kind of stuff. You could do a little bit of research on that. As a matter of fact, what I'll do is I'll post this article in there if you happen to have not seen that article. Okay. So what I want to talk about here is everybody comes to the market with certain expectations. We were having this conversation yesterday about what are you willing to sacrifice in exchange for what you want to do next? What little vote do you make every day that decides who you are every single moment? So as a trader, we need to set up these actions before we need to take them. That shows us that we're taking trading seriously. That shows us that we want to think and act like a pro. And that doesn't, I'm not talking about quitting your job. I'm talking about you're treating it like a business, and you know exactly what price action you're looking to see. You know exactly what you're going to do if the stock moves against you. You know exactly what you're going to do from position sizing before the market even opens. And once you have a trade, you get feedback, you add to that trade and starts moving in your favor. You also know, as we just discussed, how you're going to handle a profitable trade and what the situation calls for to let that stock breathe in exchange for the next bigger move. So we can get over giving up some small unrealized profits in exchange for a much bigger move. That's where trading becomes fun. That's where trading becomes something you control from start to finish. And it's not overwhelming anymore because you know what you're going to do well before you need to do it. And I hope I'm doing that for you through these calls, by the way. If you find these calls valuable, please do me a favor. Let me know by smashing that like button. It would tell me that you're getting value out of these videos. You're starting to write some stuff down. And these live streams of which stocks we're choosing to buy, why, and how to manage them, we're helping you out on that as well. So also click that subscription button because then you'll get updates for the new content. We're actually coming out with a new video today, which is called The Truth About Day Trading for a Living. So look for that today. We're going to upload that a little bit later this afternoon. So I actually have to get going right now because I have to head over into our bootcamp game plan. Look, click the link below. Learn about what the bootcamp is all about. Maybe it's for you. Maybe it's not. Only you can make that decision about what you want to invest in yourself and set yourself up for 2022. I will tell you this. This is the time of the year when everybody starts getting ready for 2022, setting those big goals. You saw what's in our boot camp. That was just the Monday night call. Decide if you want to set your goals and come and attack them with us. I'd love to have you on the other side. I want to thank you. I'm so grateful for you joining me here every day, 7:30, Monday through Friday. It really shows. Yesterday, we hit a new all-time high with people watching the live stream in person, which was just amazing. Let's keep trying to get that number to go up every day. Share the video with your friends. Let me know, and we will absolutely we'll go at it together. If you talk to anybody here who's in the boot camp with us, or even in our mastery program, we have people on their second year with us right now. If there's one thing I can guarantee you, which is not something you really want to do all the time in this industry, I can guarantee you that I will work my tail off for you. All I need for you to do is participate. That's all I ask. Ask questions, and I will match your energy by 5 times. All I need you to do is get started. All right? Have an awesome day, everybody. I want you to know how grateful I am. I hope to see you here tomorrow morning. I hope to see you in the boot camp. We got a lot of good stuff going on as well. Have a great day, everybody. Hit that like button. Let me know we provided some value for you today. Take care now.